Hey guys, welcome to Raja Makes Money, and we had a winner chicken dinner day today. Great day in the market. Back at it in the market. It's coming back. We're on a rally. Can the rally continue? So AMC today exploded, and I also hedged it. So don't have a lot of upside, but I still have a couple hundred, $200,000 of potential income on it. Hopefully it stays above 61. If it doesn't, at least I hedged it a little bit and got a couple $100,000 off of these trades for the 50,000 shares of it that I bought. But markets, where are they going? What condition are the markets in? Feds, with talking about raising rates, the Dow down a couple of hundred points, but the NASDAQ running. Apple was one of the big reasons why it's running and doing so well. So lots of stuff happening in the markets. But let's take a look. Update you guys on all the stuff I did. Unfortunately, with being on the road, it's very hard sometimes to have these shows and do trades on the road and stuff. But let me show you what's going on. So IDEX, obviously the options expire tomorrow. Once again, at least this time it's above $3. I was hoping to just be out of this one once and for all. Of course, if it was above the 40 cents higher, we'd also have another $50,000 in there, but it's not. Wish, which is the context logic, this one has just been a mess, but not as bad of a mess as Clover has been for me. Where obviously the average price on Wish for me is about $12.50. We did sell these calls, so at least we hedged it, and we're going to make $50,000 off of this. I'd love to get called out on this tomorrow and have this be up another 100. The at $12.50 be 100, about $40,000. I doubt that will happen, so we'll probably have to go into holding these, but we'll look at next week and stuff. Unfortunately, those option contracts are monthly, so I really don't want to write those now because if the thing pops a buck, but I'll be keeping an eye on it because there'll be some good premiums, $1 or something, so definitely want to get out of it. Clover, I don't know what to do with this one. May have to average down. I think the bottom is probably somewhere around 11, 12 bucks. I think it could pop again. It just needs to get going. I did a rollout today of my 19s down to the 15s, and I basically picked up about an extra $8,000 for tomorrow. Honestly, with this one, it's been going down. If it ran to 15 tomorrow and I got called out and I picked up 170,000 bucks on this, what was it, 8,000 times 250, so it'd be 8 times 2, 160 plus 40. So if this thing went to 15 bucks tomorrow and I got called out and I picked up 250,000, I would take that loss. And I mean the loss is heavy because my average cost on this one is about 20 bucks. If it drops much lower, I'll probably buy some more, average it down, which I had been doing. The same with context, but. Like I said, I look at my account as a whole. Sometimes you just have to take that loss and move on quickly. AMC, so this is interesting. I don't know why it shows a $300,000 loss. My average cost on AMC, I think it was just because of how I was buying and selling it and how Schwab calculates it all. But I'm going to... at $60.25, I have a profit on AMC. So basically, this hedge I wrote today at $4, and it's now we already made $23,000 off of the hedge. But I basically have $200,000 profit. So it takes my cost down to around $56. So, but there's a great premium. Next week's options. If this thing runs, or have to hedge it again or write the options, I can do it a lot faster now because I have at least I have brought my cost down. And there's some great profit. If this thing can maintain near this level, and you write that hedge for $9, $10, you're picking up $400,000 or $500,000 on the trade as long as it gets called out or stays above where it's at and stuff. So that's that. CCIV, I got tons of this all over the place. So I was also trying to roll some of this down today. I was trying to roll the 27s down to 25s. As you can see, a couple of them got filled, so I made a little extra money here. But unfortunately, a lot of them didn't get filled. I had it in at like 8 cents. I was hoping to pick up about another $9,000 because I was like, what? If CCIV tomorrow was $25.50, I would be in great shape, all the way around. And it was interesting. CCIV tanked on Tuesday, and then it rallied, all the way back up on Wednesday, and then today, down a little bit. Not sure what, I think, like I said, this one's going to do well. We just have to wait it out until that, July 23rd or sooner for the transition to Lucid Motors. Now, when you look at so I did start buying these 30 contracts way out there, and like I said, I'll keep hedging these every week. So I hedged these against the 28s, which was a terrific hedge. Unfortunately, this position since I bought in is down 45 grand, but at least on my hedge, I picked up $22,000. So I'm only down 22,000 on the position, and I've got 8 weeks to go, 7 weeks to go, whatever it is. So for 7 weeks, if I pick up $20,000 a week, I'm going to way exceed this amount of money here. And if the thing gets going, this thing is the sky is the limit. Those 25s I had, the 1,200 contracts. Those were up to $3 at one point. We had a huge profit, so we still have a little profit on these. Maybe I'll buy some more if it dips below $1 again, because I still like these a lot for the next 2 weeks. But and that's why you hedge those every week also. So like I said, sometimes these hedges they pay off like this, and other times like last week we lost a couple 100,000 with hedges, or the week before. So you just never know what they're going to be doing. Unfortunately for Kenny and the research team, I have closed Kenny and the research team's account down. I put a floor in there of $80,000, and I basically told Kenny, he gave it his all, he did a great job, but it's just very hard. Some of these OTC stocks, and so many of them, as you can see here. So we liquidated everything. He started with 100,000, unfortunately lost 20%, but he'll still be in the Patreon group, and if he sees something that looks interesting and helping people out. But it's tough. Like I said, even for me, when I start trading a lot of stocks, like just how many we have here, and keeping track of them, it gets tough because it's just so all over the place. You have IDX today up 2 cents. You have Wish up 14 cents. You have Clover down 39 cents. You have Jaguar down 7 cents. You have AMC up $5. You have CCIV down. So even on days when everything looks really good, like for example, I'll give you a perfect example. Yesterday I lost $75,000. I was down at one point yesterday $420,000. 420, but I was down that, and what happens is, and that was mostly AMC. So yesterday, actually, like Wish and some of those had good days, they were up, and AMC came back a lot at the end of the day. But AMC yesterday was down 4 points, or 5 point, whatever, 4 points, yeah, somewhere in there. So it was way down at 50,000 shares at 4 points. So I had $200,000 loss there, but everything else was up. And CCIV exploded, so that was the big update. So it's like it's a balancing act, and catching it all. And it's the same thing, like I was saying, that when you have these and they go up and down, you have to really, balance it out. So like when we were really highly concentrated in CCIV, I kept telling you guys it was like a progressive jackpot that was going to hit. And when CCIV finally, went up to $27, that progressive jackpot hit. And we, made, $1.8 million back. So it did really well. But like I said, everybody has different trading, patterns and stuff. In other news, Bitcoin is on the way back down again. My Coinbase has dropped back down to about 75,000. And it's kind of the same thing with this. I came in, I bought a bunch of different coins, and you have the same problem. You have, Bitcoin up today, Litecoin down, Ethereum, flat, this one up and down. And when you start playing all these coins, it's just a lot to keep track of. You're playing against yourself. So some people will tell you, and this is how I've always believed in, some people will tell you it's good to own, be diversified, and you have this whole portfolio. Well, that could be true, but being diversified and having this entire portfolio is very hard, because if you have, like I said, and I always use this analogy, and people, sometimes they agree and sometimes they want to argue with me, but I use this analogy. If you're betting sports games, and I'll tell you, there's one game a year that the bookies hate to take a bet on and that they can't make any money on. Can you guys guess what that game is? What game is one time a year that the bookies do not want to take that action on? The Super Bowl. Because it's one game. They need those 10 games. They love college because you got 20, 30 games a day. There's nobody who's that smart. We could all be very, very smart. We could all know the sports and we could all know everything. But when you bet 10 games a day, and the bookie or the casino or whatever it's through is taking 10%, they don't care what you do, because at the end of the day, you're going to lose. You're not going to win 7 out of 10 bets to make money. It just doesn't matter how good you are. It just doesn't matter. I can't pick 7 out of 10 slot machines to make money on. I may be able to pick one, but you can't. It's just like I said, it doesn't work. And that's the same thing with the stocks. When you're playing, 20 different stocks, and if they're all in different industries, yeah, you're spreading out your risk. But it's still a lot of hardship there. So, but hey guys, big shout out to all our YouTube sponsors in the chat who stand out. Penny D says, will you keep averaging down Jaguar? So if Jaguar does go down again below like 130, 140, I'll definitely buy some more of it this time, since we know it pops. Chico, put that 80K in DraftKings. Call it the Chico gut feeling, a long-term hold. And I know Chico likes DraftKings, and you know what? We can pull DraftKings up. And this is my only thing about DraftKings. So yeah, I mean, it's obviously a good company. It's they have plenty of money. They're not going bankrupt or anything. But this is the problem with DraftKings, and it's also it's mid range, kind of towards its lower end of where it's been and stuff. But this is the problem with DraftKings, and this is the only reason I don't like DraftKings. And the CEO, even when he gave his interviews on CNBC a while ago and different stuff. But this is the big problem with DraftKings, is they have great business model, but they have to spend so much money on acquisition costs. So for them to become profitable is going to be very hard because of acquisition costs. So now the flip side, you'll say, yeah, but Raja, more states are going to legalize gambling. They're going to keep growing. They're going to do well. Yes. But every time another state legalizes gambling, they have to then spend hundreds of millions of dollars getting new acquisition and new customers. Because there is competition. So you have MGM, Barstool Sports, and there's probably 20 of them out there now. But yeah, so you have to spend a lot of money in acquisition costs. So that's you guys have all seen the thing of bet on this boxing match tonight. If somebody throws one punch, you win $100. So you have different stuff like that that you have to keep up with in some of those. So. Fire says, think Wish will take off. I wish it goes to 1250. I wish it goes to 1250 tomorrow. It'd be a dream come true for me. But I think it's going to be okay. I think it's going to hold in there. $10. It'll spike up to 15. Like I said, I'll probably hedge my position. I won't do it right away next week. Because I hate these monthly ones. If it pops up, I'll just get rid of it. But if it gets into the second or third week, before it expires, then I'll hedge it. And because the premiums are nice. You can pick up a good premium on it and stuff. So, Aiden says, sorry to hear about the team account. Please don't feel bad. We all have ups and downs, but you must have a plan and a limit. If your limit hits, you need to be able to walk away and rethink. And that's why I said you always want to just play with money that won't affect you. And and this is very much like gambling and stuff. So you definitely have to be careful and, watch, your budgets and set limits. Like I always tell people, always, this stuff is high risk. So always set your limits and stuff. But yeah, let me show you like on Wish, for example. So you have those monthly strikes, which makes it a long term. So this month here, so like we did the 1250s. And they actually had an 11. I thought about writing the 11, and but it's like the amount of money and where it's sitting at right now, it just doesn't I think there's a profit to be made here. Now if we go out, you know what they added? Well, this is new, guys. This is big. They added weekly options to Wish, so maybe because of the volume. So now tomorrow this actually isn't too bad. Now tomorrow we could write a 1250 at 75-80 cents. Or maybe even like the 13. I mean, ideally, if Wish was up, 50 cents or $1, and then you can write one of these for like $1, and I have 110,000 contracts, I can make $110,000 for the week, and buys my price down from an average of $12.50 right now down to $11.50. So that's very helpful. Actually, a good thing we talked about it. I should also look at. The other dud we have, CVOS, because I actually didn't realize if that one, Clover, that was also another one that was just a monthly one. And if they added weekly, this is huge, guys. See, this is where, and I don't know if I shared this with you guys, because I don't think we went live that day, but I didn't realize this whole time that Jaguar also was optionable. I just never looked because it was a $2 stock. I never really thought about it, even though IDX was the same boat here, I guess, same range. So I could have made a lot more money every month. I could have sold those Jaguar calls, but that one definitely was monthly. So this is huge. So let's look at here, Clover Health. So the problem with Clover Health is I'm into it at $19. So, but even at $19 next week, I mean, even if I wrote, here's the thing, I have so many shares of it. Even if I wrote the 1650, this one here, so the 1650, if I could get this 40 cents out of on 80,000, it'd be $30,000. That takes my average up to about 17. And if this thing actually went up 4 points this week, I would be in heaven. I would be happy to be out of this one, because like I said, some of these you just never know. Of course, it could go back to $28, but like I said, so let's see the other one, Jaguar. Maybe they headed weeklies on that one. So obviously these option makers are getting a little greedy. So this one, unfortunately, no weekly options. But the same thing, if you write those 25s, if you can get 20 cents, it's pretty big. Jaguar is sitting at $1.68 right now, right? So I have, in this account, 80,000 shares. If it goes from $1.68 to dollars, or excuse me, to 250, that's $56,000 upside, and I have you get another 20 cents. That's 250 takes you to 270. That'd be $80,000 if I get called out in a month. But I'd rather wait for it to run a little bit before we write that one. So we should also look at IDX. That would be the one I love if they would add a weekly one on that one, because that one is always hurts us. Yeah, see, this one's still same thing with only the monthly, and we could look at that 350 again. And so right now the 350 is 26 cents. If it pops up 30, 40 cents, it'll go to about 40 cents. So that'd be a nice hedge. If we could sell 180,000 contracts at 40, 50 cents, that gives us 90 grand. And then if we get called out at, 40, 50 cents more, you got 90 grand there. So, I mean, like I said, the good news is it just keeps coming down, and, it all adds up and stuff at the end of the day. So it'll definitely be interesting. Like I said, we'll have to see where it ends. But that is really good news. That's huge news for me, actually, to be able to hedge those and stuff. Now, here's what I was telling you guys with AMC. So look at the premiums on AMC, especially when AMC gets volatile. But they're saying that the meme, stocks and everything are slowing down a lot. So who knows? But yeah, here you have like the 61s. They're 350, 355. That's where our cost is. So if we go out next week, right now on the 61s thing, it's $10. So. This is where you have to decide what to do. This is what separates the gamblers, the men from the boys, and everything, because I have 50,000 shares of this, of AMC. At $10, if I sell that option at $10, that's 100% of what I paid for it. So I already actually have a problem. I'm into it about 56 something. That's $500,000 for next week. One transaction. And it's 10 points. So if it goes down to 50, basically it could go down to $50, I'm covered. The problem is this thing could go to $20, and then I'm down $1 million. At least I picked up $500,000, but I could lose $1 million, and hopefully it could go to $100, and then you don't have any upside except that $500,000. So this is where these hedges and different strategies. The other thing is to look at too is you could go to a 65 is even not bad. If it runs a little bit early in the week or something you can go to the 65, so it gives you, 4 more points of upside, 200,000 extra, but you only get $885, $9, so you're getting $1 less, but you're giving yourself, so you're getting 50,000 less to give yourself 200,000 of upside if you believe it's going to go up. So these are just different ways to look at this stuff and hedging, and like I said, the hedging works well. And like I said, I want to hit AMC with like 100,000 shares at $10 for $1 million a week on it. I think it can be done. It's just a matter of where this thing is moving to and going. But as you can see here, like for next week, I mean, the strike prices are very, very, heavy on these things. I mean, even like the 75, I mean, $6. There's not a big adjustment between here. So if you look at like the 70 to the 75, basically $1 and you get 5 points. I mean, that's strong if this thing runs. So, sometimes it's a gamble. It's not really greed, but it's the whole thing. If you wrote the 61, if I wrote the 75 for 6 and on 50,000 shares, that's 300 grand still for next week. You have the risk that it could go down 100, 20 points or whatever. But if that thing runs 14 more points and you have 50,000 shares, you're talking about $700,000 upside. That's your $1 million week on 50,000 shares. So all sorts of crazy strategies and different things there. So Andy says, I am really upset with AAL. Lots of calls there. I don't know anything about AAL. American Airlines. I think these airlines are going to, flying today, we should look at Southwest. I mean, they are back selling out everything. These things have to go higher. I would love to look at, for Southwest, let's see here. So Southwest, $55 right now. I would love to go out to like December, because you hedge these too. 55 for $3.80, 6% premium. I'm telling you, they have a lot of debt and they have a lot of stuff on the books and stuff, but they've got to do well, because these airlines, I mean, every flight's sold out again. I mean, the airports are disasterful, they're packed. Southwest has flight delays. I don't know if there's a staffing shortage. And like I said, these companies all have debt that they've taken on and lost a lot of money. But if they come back really strong, these have some great potential. And yeah, I mean, look, like I said, you go 92 days out. Let's say even like you went out July 30th, 43 days, the 55, for, $2, or let's say $3. And then next week you could hedge it. So like next week, so you buy that for 55 and you sell the, 57.50 with 2.5 points of upside potential for 27 cents. As like I said, it's small money. The downfall, this thing goes to $60, then this 27, you lose money. So you just got to be very, very careful with these different hedges and stuff, and how you play them and everything. So David has a question. Says, if you close covered call midweek, do you just collect whatever it may be at the time, or do you have to hold till expiration? No, you can close at any time that you want to. If you do close, you pay whatever the cost of it is back. So, for example, like let's say I wanted to close AMC. So today I sold these AMC. I sold 500 contracts today at $4. So I got $200,000. If I want to buy them back and close the position, it's $3.52. I could sell at one point today after I sold them AMC. These were like $5.50 because it went to $63.50, and then it was also at one point like back to $58, and these were like $2.75. So I could have sold them for $4, bought them back at $3, and resold them, when it ran back up to 61 at $4 again, and made 50,000. So you can close them at any time. If you let them expire worthless, you keep 100% of the premium. If you close them and buy them back or roll them out, that would be basically what you're doing and stuff. So, but hey guys, I want to thank you guys so much for watching Raja Makes Money. I hope you guys had a great day in the market. Tomorrow I'm back on an airplane back to Vegas. I flew back this morning, back to Vegas tomorrow morning for Kevin's ClickFather's 50th birthday bash. And then Friday, I guess they have a slot tournament they want me to play in now. So I'm going to play in a slot tournament Friday afternoon. So I'll have a good time. Be some sporadic live streams on Big Jackpot and Raja Slots or Facebook Big Jackpot and stuff. So definitely keep an eye on it. Big shout out to the moderators. Thank you guys for all your help on Raja Makes Money. And hope you guys have a great finish to the week in the market. We'll definitely have a posting so you guys will see how I finish. Of course, all my Patreon members, you get all my trades in real time. But that's what I got for you guys. And hey, let's make a lot of money and let's make a ton of money next week. Take care, guys, and I'll see everybody live from Las Vegas sometime tomorrow night.